Hello, welcome to the European Open briefing for Thursday, October the 27th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So the main headline this morning is we have a fairly stable dollar. Yesterday, the dollar recovered some of its losses after it was boosted from fairly strong services PMI out yesterday. The euro and the pound are struggling this morning to hold on to key levels. In other news, the Riksbank, that's the Swedish central bank, it left interest rates unchanged at minus 0.5% at its meeting today, although it did signal further easing. Another mover is the Australian dollar today. The Aussie sharply reversed yesterday's strong gains after finding resistance at the 0.77 level. While crude oil has slipped back again as markets remain unconvinced about the likelihood of a deal at the OPEC's upcoming meeting in November. So let's begin with the dollar-yen pair. We can see the dollar rose back near to 3 months highs against the yen at 104.60, around about that level. Yesterday, the pair were boosted from the market flash services PMI data that rose to 54.8 in October. That was the highest since November 2015, and it comfortably beat expectations that it would stay unchanged at 52.3. So once again, this is another set of strong data for the US, and it reinforces expectations that the Fed will raise rates at its December meeting. Before then, though, we have GDP data due out tomorrow. That's going to be the preliminary estimate of third quarter GDP, and that will also be another key data for the Fed to take into account when setting interest rates. The Fed, of course, meets next week, although given that that's days before the US elections, I think it's pretty much we can say that the Fed is unlikely to announce anything next week, so all eyes are of course on the December meeting. Now, if we look at what's happening at the euro and the pound, we can see both currencies recovered yesterday. The pound rose back about $1.22. That mainly came on the back of comments by Mark Carney, the governor of Bank of England, he said that the Bank of England would of course take into account the weaker sterling, and that will factor into the bank's decision whether or not to cut interest rates. The Bank of England holds its November policy meeting next week, and following Carney's comments, markets have sharply pared back expectations that the bank would cut rates again. Up until prior to those comments, there were still some expectations that the bank would cut rates for the second time since the Brexit vote, though given how sharply sterling has fallen, there's less of a need to do that because, of course, a weaker exchange rate goes some way in terms of easing financial conditions in the economy. The euro, on the other hand, it's struggling to hold on to the 1.09 level. It's trading just below that level. The part of the reason why the euro recovered together with the sterling was because there was a bit of an increase in Eurozone bond yields, so that boosted the single currency. The next major data for the Eurozone will come on Monday, when we're going to see the flash inflation and flash GDP data for the third quarter. So that will be something to watch out for next week. Now, looking at the Aussie and the Kiwi, we can see the Australian dollar peaked yesterday just above 0.77. It was unable to hold on to that level, so as soon as it fell below the level, that triggered a sell-off. And of course, yesterday it was boosted by very strong inflation data, which reduced the chances that the RBA would cut rates again. The Kiwi, on the other hand, it was weighed slightly by worse than expected trade data. New Zealand's trade deficit increased to 1.44 billion New Zealand dollars in September. Expectations were for a smaller deficit of 1.265 billion New Zealand dollars. If we look at what's happening in oil prices, we have that spike up yesterday. That spike up came after the latest inventory data from the US Energy Department that showed that US crude stocks declined instead of increasing as expected. So that boosted the prices briefly. We can see it quickly reversed, and it's currently below $50 a barrel. And that's mainly because of conflicting messages from various OPEC countries. Recently, we had Iraq saying it wants to be exempt from production cuts, and Russia seems a bit unsure whether or not they will agree to a freeze or a cut. So that's weighing down oil prices at the moment, and that's pulled the Canadian dollar lower. It's back near 7 months lows, and the USD/CAD has this morning increased to around 1.3375 Canadian dollars. Now, this morning we had the central bank decision from Sweden. The Riksbank decided to leave interest rates unchanged at minus 0.5%. It's strongly signaled further easing. It said that because inflation will take longer to reach its 2% target, that the probability of further rate cuts has increased. It also suggested that it could extend its government bond purchases. And we can see that there was a bit of a swing in the Swedish krona against both the dollar and the euro. We can see against the dollar, the dollar is trading at around 8.9250 kronas, whereas the euro is trading at 9.70, just below 9.74 kronas. So it fell. Well, it rose against both the euro and the dollar shortly after the announcement, but then it fell back again after the details became available that the Riksbank has an easing bias. Also out this morning, just not long ago, the Norway Central Bank announced that it's kept its interest rates unchanged at 0.5%. So let's have a look at today's calendar. We can see here we had the trade data out of New Zealand. And then, of course, the Riksbank's decision to leave interest rates unchanged, and Norway's decision that just shortly announced that it's held interest rates also at 0.5%. We've got the GDP data out of the UK coming up shortly. It grew by 0.7% in the second quarter. That's expected to more than half in the third quarter to 0.3%, although that's still better than forecasts that it could contract or be flat in the third quarter. So 0.3% under the circumstances is not too bad given the Brexit shock. We've got a fairly busy US session. We've got durable goods data, we've got the weekly jobless claims, and we've got pending home sales. So that's a good amount of data to watch out for the remainder of the day. That's it from me. Thank you for watching and have a great day.